Hey guys, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 12th, 2018. This is a closing market wrap. Markets have closed for the day, so I wanted to do an update on what we saw today and what to look for going forward. Before I get into the video, just remember you can always hit the settings button on the YouTube down on the bottom right-hand corner of the YouTube video. Increase playback speed either to 1.25, 1.25, or if you're a very fast listener, you can go to all the way to 2.0 two times and cut down the duration of the video. It's my preference when I watch anything on YouTube. They're usually, a little too slow for me. But either way, also give it a thumbs up if you like it. That really helps. And the more thumbs up I get, the more I'll post on the public YouTube channel as well. So we're looking here today at a QQQ weekly chart. Now, again, not a lot happening on the weekly time frame lately. In the past week or so is what I'm referring to really mention. Although today you can see so far we just poked our head and managed to close right back above that trend line. So this is something I've talked about recently. We clearly broke down on the SPY. We broke down a couple last week actually was the first weekly close below that primary uptrend line. Again, that comes off the mid 2015 lows. Lots of reactions. This was an intraday cut below, but we closed back above it on a weekly. So, not only does that in any way invalidate the trend line, it validates it because we had an intra-week break, close back up. Lots of reactions. This is a beautiful trend line. Even that February low, we undercut it and closed right back on it. Tagged it the next week, rallied. So you can see, again, this is significant. Now, anything can happen, and anything will happen between today and tomorrow. Well, today's over, so now we have tomorrow, and it's a weekly candle. So no matter what happens during the week, the only thing that matters is a weekly close. And where I'm going with this is we're still, like I've said for the last week or so now, at I think, a very critical level in the markets. It's do or die for the bulls and the bears. Bulls need to defend this level. They defended this 40-week moving average so far on the last two tags. This is the same as a 200-day moving average. I use the exponential moving average as my preference. We pounded off it there. We reversed hard. We reversed off it there. And now, if we can rally up and print another positive close tomorrow, we will have regained this trend line, and that will have proved to have been a false breakdown or whipsaw signal. That'd be pretty bullish. Of course, it can go the other way. This could just simply be a back test of the trend line, and then we continue to move lower now. I've shared my thoughts consistently throughout the last couple weeks here that I've been bullish and long, and still favor that upside. Although I'm not betting the farm on it, at least not at this point, but that's my positioning, and I still think we go higher. But I'm open to all options, and we'll know soon. We'll know soon enough. This little consolidation range over the last week will not last forever, that I can tell you. So it looks like the PPO is starting to curl up here, but it's still pointing lower. These are momentum indicators. So from the weekly time frame, the trend is still bearish. We're starting to curl up after hitting this 50 level on the RSI. The 50 level often acts as support or resistance when tested from above or below, so that's something else to consider. All right, now let's move on down to the daily time frame. And let's do this. We already know what happened here. I've gone over this chart quite a bit, so let me clear all annotations and I'll show you what stands out to me. A couple things stand out. Number one is the fact that we've had sort of a stealth rally, a lot of pessimism in this market, and maybe they're right. Maybe this is a dead cat bounce, bear market rally. But I've maintained a bullish bias, and I still think it's going to be we will continue to go up. But if you look at what's happened over the last couple of weeks, we've had last couple of weeks here. This is a daily chart. Big bullish engulfing candlestick right here. You see this big green candle engulf that previous candle, engulf the red candle before it. That's quite bullish. As I mentioned, hammered off the 200-day moving average. You can probably just barely make it out here. I showed it to you on the 40-week moving average, so that's bullish. And then if you think about the trend, as I pointed out, several times recently, the very near-term trend, there's different trends. You can define the near-term, intermediate term, long-term trend, but you can see this near-term trend is bullish. Let me turn those lines back off. I'll draw with these screen draw tools from the video. There it is. So that's the near-term trend. It's bullish. And if you look what's happened since that bullish engulfing candle, all but pretty much this one day right here. We had a red day, big pop. We were very near term oversold, and there were a lot of shorts that didn't, doubted the rally and shorted into it. And so we had that after the big pop, a little pullback. But since then, look at all the green candles. And the only other red candle we had was barely red. Here was the green candle before there was a close. So we closed slightly red that day. So far it's been a steady Eddie grind up. And, these are 1% plus days recently. So you got to look at it that way. You got to give the market some points that it is moving forward. And yeah, gone for now at least. And I told you that would happen. We wouldn't see these 3-4% intraday swings forever. The VIX doesn't stay elevated for too long. I've gone over that before, about 3 months max when I went back for the last 10 years, and we're already 2+ months into elevated readings on the VIX. So that's that. And another level I wanted to point out here, a couple other things, two other items that I haven't covered lately. Here's a level to watch, this 50-day exponential moving average. Let me turn it up for you to see this yellow line. So there's a lot of overhead resistance. There's both price resistance that I've been covering, every day recently on the QQQ and SPY. I'll get to the SPY in a second. This 50-day, I use an exponential moving average again, does a pretty good job at defining trends. You can see that, for the most part, if you go back in time, look at that yellow line, and, for most of the time, the Qs were in an uptrend, and you can see that they were above that line. We had a few corrections along the way, and that's when you get down below the 50-day. And when you recover it, boom, you're usually back to the races. And pullbacks to the 50-day have acted as support. And again, when you have a pretty good correction, you dip down below it for a little bit, and then you got back above it. So this will help us, tell us, if this was just a correction, this market has some more upside in the coming months, which is possible. Another thing I look at when using these EMAs is not just is price trading above or below, but what's the slope or the direction on that moving average. In this case, the 50-day is pointing down. Now, the only other time over the past couple of years, now remember, we're also coming off one of the strongest in most, low volatility steady advances in many years. So you would expect the 50-day to be moving up over the last couple of years. And the chart I covered here only goes back 2 years. So the only other time it even sloped downwards was during this correction, and then it resumed its uptrend. So right now it's still pointing lower, but starting to flatten out. So again, there's just numerous technicals right now that tell me if we can pop up another 2-3%, we turn a lot of indicators back to bullish. We take out a lot of important resistance levels. However, if we fail here, we keep these, we'll keep this 50-day pointing lower, or we'll be rejected off of it. So, a case can be made either way. And, one of the things I hate, from all my years of trading and being on the following various services sites or reading analysis from others, I hate, well, the market can go up, it might do this, if it does this, it's going up, it might go down. I hate conflicting analysis and then jump on whichever one's right or wrong. I may be right or wrong, but I'll tell you my thoughts, and I already shared those, that I think we're going up. So if I eat crow, that's it. But I also am telling you that I'm not betting this very hard because anything could still happen. But if we do break above those levels, I'll probably add to my net long exposure. So that's what I'm looking at. That's one of many things. We'll get down to the 60-minute, the intraday charts here in a second. But before I leave that, let me share something else. It's the PPO. We're making a bullish crossover. We just made a bullish crossover, both on QQQ and SPY. Here we go. We have a bullish crossover here. And I talked about this in a recent video. And surprisingly, I don't always have time to comment to those on the YouTube channel. Please understand that, guys. My priorities go to the website, to paying members. If and when I have time, I will reply to questions. And I also want to say I get a lot of the feedback, and I really appreciate that. Positive feedback. If you don't agree, fine. I'm all for constructive criticism, looking at other opinions. Just keep it constructive, guys. If I get the negative, you know what I'm talking about. If I have any insulting comments to me or anyone else on the YouTube channel, you're going to be blocked. That's not going to be tolerated. We don't tolerate it on the site, and I don't tolerate it on the YouTube channel, but I do welcome alternative opinions and constructive criticism. So the person that I mentioned had asked the other day, or made a comment actually, stating, because I've talked about these bullish PPO crossovers when you have clean separation. Now, what am I talking about clean separation? If you didn't catch that video, well, let's put up the PPO histogram. The PPO histogram is simply, it tells you two things. It tells you when the PPO line is trading above or below the signal line, and that's when the histogram goes red. Here, we'll park the RSI, get out of the way for a second. So it shows you red when it's the PPO line's trading under the signal line, green when it's above. So green's bullish, the trend is bullish, red is bearish. And it also helps you show when those lines cross over, because just looking at this, unless I really stretch this apart, sometimes it's hard to see when those lines have made a crossover. But you can tell down here simply when it goes, you color code them, and when it goes red, it's bearish cross, and when it goes green, the lines have crossed bullish. And anyways, the point that I was saying in that video the other day, I do not use this trend indicator, or this momentum indicator, I should say, when you have very low volatility or you're trading sideways. You tend to get a lot of whipsaw signals, and I don't find it very useful, so I stay away from it. However, I said recently, when you have this clean separation, and again, you can see the separation by the distance here. So not only did these, the histogram give you an idea of whether the lines are above or below, but how far apart they are, or the differential between the two. And so when you have those high differentials, those are what I refer to as clean bullish and bearish PPO crossovers, and they work as very good. They're confirmation. They're not standalone buy and sell signals, although you could use it as that. I said I don't. I wait for, I align it with trend line breaks of support, resistance, other, chart patterns I'm watching. And then the point that I wanted to wrap up here is I pointed out that, it's done a good job of signaling those trends. And the response was, oh no, by the time you get the crossovers, the trend is already over. On a bearish crossover, by the time you get it, the pullback has ended and now the uptrend started. That's hogwash. I don't know, where that came from, how that person saw that. We'll just hold it here. Here's a bullish crossover right here. No, that wasn't clean. This was our first clean one. So we had a bearish crossover. If you look at the crosshairs, I'm putting it on the first red bar on the histogram. You follow that up to the candlesticks, and there we are. We're at this candlestick right here. Let me grab my arrow tool. That was when we got the bearish crossover. So it captured the bulk of that drop, which was from that point, that was almost an 11% drop. This point here, we had a green crossover, a bullish cross on the PPO. I'll hold it there, and I'll grab that candle, and I'll measure up to the top. Now, yes, I'm playing the game of selling the highs, but again, the point is these signals don't come late. They don't come right away on a daily time frame, not right after the move. But when you start zooming down to the intraday charts, they do come sooner. The shorter the term, the time frame you're on, the quicker the signals, the buy and sell signals will come. You also have more whipsaw signals on the shorter term time frames. That's why you like to use the day, or I like to use the daily. But now we have, for the first time, as you can see, since this crossover here, we have a very, very clean separation on the line. These lines have been separated, and we have, as of today, a bullish crossover on the QQQ. So that is another checkbox there. And this is the daily time frame, guys. This is significant. Unless this proves to be a whipsaw signal, meaning it rejects and crosses back down, and that's possible, this is usually a buy signal that's good for, at least a week or more. Could be months. We'll see. But again, we have some other levels to take out. I just wanted to point that out, and also to point out, the percentage moves that this has captured. There was a nearly 9% drop since the PPO crossed bearish. So here we are bullish. Yes, it didn't cross right here the days, so far when we bottomed, but this is additional supporting evidence that we may be in the early stages of a new uptrend. Okay, and I can look at we'll do this. We'll look at this SPY for a second just to show you that this already crossed over. Same story. I'm not going to go through, exactly where it crossed. You can replicate this on your own. And I also mentioned that the signal line often works as support. This looked like we were going to get a bearish cross, and we rejected right off it. In fact, we might have had, you zoom in here, look, you can see a tiny little red. We barely crossed down, but you guys have heard me say this once. You heard me say it 1,000 times. If you're trading any one index, I've been focused on the NQs lately, the Nasdaq 100, both day and swing trading it. But I'd never trade it without keeping one eye on the other major large cap index, the SPY. So therefore, if you get, for example, a sell signal, a whipsaw signal here, or a crossover on the SPY, Doesn't mean much to me unless QQQ confirms it as well. So right now we have, again, today a crossover on QQQ, bullish cross, and 3 days ago we had a bullish cross on the SPY. SPY also has that 50-day exponential moving average to contend with as well. So let's move down now to the intraday charts and we'll wrap this up. All right, big levels here. This is what I'm talking about. Let's see what frame I want to cover. All right, let's just start out with this 15-minute chart. I shared this on the site for members today. It's 266.90. That is just a solid level. For the last actually since late March, both QQQ and SPY hitting comparable levels. You can see, failing at those levels, multiple failures there, either at or, just a hair below or a hair below, above. Today, we were pushing, pushing, pushing. So SPY has yet to take that out. We had a little sell-off into the close. So again, this is what I'm talking about. You have the 50-day exponential moving average overhead. You have these, and I'd put an even higher weighting on this resistance level. If this is watched, unless you are completely blind or brand new to technical analysis, don't know the first thing about charting, you're watching this level. Everybody's watching this level. It's an important level. Whether it proves that we break out and then fail, that's possible. Anything's possible, but you have to take it on face value. Right now, the trend is up. You can also draw a trend line below as well. So we have sort of, if you look at it this way, an ascending triangle pattern. And yes, as I mentioned, this thing can break either way. Resistance is resistance until unless taken out. And we could fail here. We've had numerous attempts. But if we take it out and can hold it, especially on an impulsive move, I talk about that a lot. Long side breakouts, ideally you want to see on 1.5 times or better average volume. Today, the SPY failed to break out, and that's one reason the Qs didn't go anywhere. And when we look at QQQ, it did break out of its comparable level. Here's a 15-minute chart. And you can see right here, again, same story on QQQ. It had a virtually identical level, not in price, but as far as hitting that level, failing there on many attempts. Took it out this morning and traded above it throughout most of the day. But my volume bars are really tuned down here. You probably can't make it out, but I pointed this out in the trading room on the site. Very low volume, so it was a non-confirmation of a breakout, and we didn't have, number one, impulsive price action. Impulsive means you see strong buying, quick big green candles. That was lacking, as was volume, and that wasn't mere coincidence. It's because this index broke out and the SPY didn't. So as I said, never trade any one of those two large cap indices without keeping the other. Or if you want the Dow, Dow's only 30 stocks. That's why I focus on QQQ and SPY. So there it is. So we've broken out and in the SPY, in the Qs, but we still have some resistance levels overhead. We have that, exponential moving average. We do have some bearish developments on this 60-minute chart. So it's a case of glass half empty, half full. You can look at it the way you want. And I'm sure a lot of people, and I'd be remiss not to point out these negative divergences here. We had positive divergence at the lows, and now we have negative divergence here. But it's a case of, and I've always said this, in my book, the longer term time frames, in other words, a daily chart, the technicals there take precedence over any technicals on these 60-minute charts, as in the 60-minute charts to me are more significant than what happens on the 15-minute charts. Right now we're looking at a 15-minute chart. So there it is. So we have this wedge type pattern, and things can go either way. The bearish case has us breaking down. You can see some of the supports below. This is not the final support because we have this double bottom low right here back around about 154, but I think it'll get really ugly if we do break down and don't hold 156.80. So this would be, let's just say, my bullish and preferred scenario is a breakout soon, either tomorrow or early next week. My alternative scenario would be a breakdown and then reverse off either of these blue support levels. And then, of course, the final scenario, which means I'm just, wrong, but I'm not going to be long and wrong all the way down. Let me make that clear. If we break this down, I've got pretty tight stops. relatively tight. Day trade, I close out at the end of the day and then I keep a swing position on. Then I'm giving a little room down here because I could see this breaking down just to shake out the last of the longs before they ramp it up and take out that level. A lot can happen here, but either way, let's just watch those levels. And again, probably my favorite swing trading time frame, the hourly charts. It's just a story of these divergent highs, big corrections, divergent low. These are what I like to swing trade trends with. You have a bullish trend, divergent high, trend line break is your sell signal, divergent low. You have a rally, divergent high correction. So these are the major trends. And again, this is sort of helping me override some of those negative divergences I see on the 15-minute charts, because we had the pretty powerful divergent low here on the 60-minute chart, and now we're starting to see some bullish developments on the daily time frame as well. And when you look at this divergence that I just showed you, I showed it to you a minute ago on the 15-minute charts. It's not as clean here. Yes, that is negative divergence. I won't say that it's not, but it's not clean separation between the lines. The lines have been flattening out. I like to see these peaks and valleys, peaks and troughs in the indicator, particularly the PPO as well as the RSI. So I think it might be a case where, we all see what we want to see. If you're bearish, you're watching this rising wedge, you're thinking this is a kickback rally within a larger bear market with a lot more downside to come. Maybe you're going to be right. We'll know soon enough. And if not, for many of the reasons I've mentioned, including excessive pessimism, extreme highs on the put-call ratio, bearish sentiment, all that good stuff. I think that put at least a near-term floor in the market. I think we can see a little more upside here in the coming weeks, maybe a little more than that. Maybe it's quick. Maybe it only lasts through next week. We'll see. But that's my outlook for now. And to wrap this video up, in one of the recent videos, again, not only do I always watch the major large cap indices, even if I'm trading one or the other. If I'm trading SPY, I'll not take a breakout until QQQ confirms that it broke out of a comparable level or pattern. But then I drill down within the top holdings of both the S&P 500 and the QQQ or Nasdaq 100, and I mentioned these the other day. And this is why that breakout in QQQ today didn't run. I said just a few days ago there's some comparable resistance levels, significant resistance levels on the top components. Here's Apple, AAPL, tap, 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 multiple reactions on this level. We had reactions from below back here, little brief breakdown there, but then a reaction, another reaction, another reaction, another reaction. So on a scale 1 to 10, this is getting close to a 10 for a resistance level. And these are the market leading stocks. So it's do or die time is what I'm trying to say. And that's it. So, if you see Qs start moving up, if you see Apple take out this level, you see Alphabet take out this level. Here's the level. Let me show it to you better on Class A shares. There it is right there. So you see Apple, Alphabet, you can see it's been knocking on these levels as well. It has, a lot of reactions on that level. You have Microsoft is not as clear. Amazon has a very well-defined level. These all need to go, and the market is interrelated. If one goes, they all go. If Q's pop, Amazon pops, Apple pops. There's a backfill to be made on Amazon, and that roughly aligns with at least my minimum targets on QQQ. You can see a downtrend line here that comes in. So again, if you want to know what I think is going to happen either tomorrow or next week, at least this. Maybe more. It'd be bullish if we broke that out, but at that point, I will most likely be booking some profits on longs, wait for a pullback, maybe short it. Again, that's active trading stuff. I should probably not go off topic right now. Some of the trades that I do are so in and out that a lot of them I can't even post on the website for members, because by the time I do it, I might already be out of the trade by the time I can sit there and screenshot a chart and put up what I did and why I did it. But for swing trading, this is more of a swing trading op here. And it also plays into the market analysis. There's Facebook, Intel. You can see that's another important one. Intel is actually making a run at the new high, its previous highs. There's a previous high right there, around 53.80 or so, and you had a reaction right here. That's where it stopped today. So here's another stock pushing up against important resistance. And there's Cisco recently broke out. NVIDIA, I mentioned that broke out of a bullish falling wedge recently. It's been doing well since, already up 5.5% just a couple days, but coming up on this 238.13 resistance, which is where I expect a reversal in NVIDIA. And again, I'm covering this, by the way. I'm not just, these aren't random stocks. They are the top components of QQQ. I have my a watch list here of the 103 components within the Nasdaq 100, and they're all sorted by market cap. So heavier market cap stocks have a higher weighting in the index. And so there's what I'm watching, guys. So do or die time. If you're short in bearish, I can tell you it's subjective to short here with a stop not too far above. If you have an impulsive break above all those levels I just showed you, stop out, take a 1% or so loss. The downside, the risk reward is good. I'm just leaning the other way right now. But if this market convinces me that it's going to fail here, and we're going lower, my bias will switch pretty darn quickly, as will my positioning, of course. All right, guys, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it, and have a great evening.